Uzanıyoruz. CNBC Londra temsilcimiz Güven'e sözü bırakacağız. Citi'nin gelişmekte olan ülkeler Stratejisi Küresel Başkanı Costa ile bir görüşme gerçekleştirdi. İzliyoruz.
Londra-İstanbul hattında piyasalara özel bir parantez açıyoruz. Bugün Citi'nin gelişmekte olan ülkeler Stratejisi Küresel Başkanı Costa ile birlikteyiz. Hi Louis, welcome to our show.
Hi there, good to be here.
As 2025 draws to a close, how would you summarize the year for global markets? What kind of overall picture or balance sheet do you see emerging?
It's been a year, I'm going to say it's been because it's not finished yet, but it's been a year of extreme volatility, right, on the headline side, not necessarily translating in massive volatility on the asset side, but I mean, many surprises, right? I mean, let's not forget, we start 2025 believing on dollar weakness. But why were we believing in dollar weakness? Because we were focused on the net international position of the US. We were focusing on this bias to sell US assets. And in a matter of 3-4 months inside 2025, there was a total reversal of this view, right? I mean, global portfolio managers are now back to trading US exceptionalism, which makes a lot of sense given the growth dynamics, given the AI bias, the tech bias. So a year of, very interesting surprises and, the bearishness when it comes to trade and tariffs. I mean, knowing that, of course, we haven't seen the full effect of that yet, the US will establish itself at a much higher net effective tariffs. I mean, you should expect some goods inflation. You should expect some effects in global trade. But it's very interesting that here we are. We are about to enter, a new month and almost, the end of the year. And we have seen very little effect in terms of global trade volumes and, rise of goods inflation in the US. So very interesting year with many new variables in the equation of investment. But the most important thing that if you put this all together, it continues to support EM assets, right? I mean, hence, the returns we are getting this year in both sides on EM equities and EM fixed income as well.
So the biggest surprise for you, as far as I understand, is the return of the dollar. Can we say that the dollar has returned totally and really this US exceptionalism is being priced, or it might change in the coming weeks?
I believe that, it's in part because of the state of volatility out there. I mean, volatility is just not. I was just looking before we started this interview, looking at a few charts here of implied volatilities in global assets. I mean, it's been down and down and down. And also going back to the effect of this global bias back into US equities. That's quite interesting, but this is not necessarily, that gives a risk on feeling to the market, but without, boosting the dollar, because here we are again back into, high expectations of Fed easing. So if you put this all together, in an environment where emerging market central banks have been very cautious, this is very important to mention, right? They've been very cautious. They are not easing excessively or aggressively. That continues to support the valuation of EM currencies there, from the real rate perspective. So we do believe this is probably has lags that will probably continue to be supportive. But the big question mark is, what if the dollar turns? What if the US growth going into 2026 surges at a faster pace than expected? That can be trouble for the EM assets.
It's interesting, really. Louis, let's speed up. I have lots of questions. Every year has its winners and losers. Which country or region do you think clearly came out ahead in 2025 and who fell behind?
Well, I wouldn't say loser. I think that this is a region right now at the verge of many political changes, right? And it's not necessarily the losing end, but I mean, it's definitely a region. LATAM is a region where, between now and the last quarter of 2026, we might see very important political changes, which might induce the comeback of some volatility in the markets, right? So, I mean, that can be good, that can be bad, depending on how, the elections go, if they are biased towards, a more market-friendly aspect. But I think that this duality between the left politics and right-wing politics in LATAM, that will probably continue to be an issue. The winner for me is definitely I would say, a few jurisdictions doing the right job, but South Africa continues to stand out in our map of risk here from the positive side, giving lower inflation targets, a very cautious central bank, despite the fact that growth continues to be anemic. It's a country that is establishing good predictability in terms of fiscal, knowing that fiscal continues to be a huge weakness for not only EM, but for the EM countries out there.
Okay, so within the Emerging Markets League, how would you position Turkey right now?
It is definitely, on the positive side. A lot has been done in terms of, predictability of monetary policy, FX regime. A lot has been done. We cannot definitely overlook that. The fight against inflation continues, right? I think that is going to be very important to focus on that and understand, if the disinflation will continue. I mean, that can be extremely positive for the continuation of FX stability in the country. And obviously, this is a country with, exceptional commercial ties with several parts, right? I mean, not only Middle East, actually increasing the commercial relationship with, important Middle Eastern partners, but also Europe, right? I mean, and in several sectors, for example, machinery, vehicles. So it continues to enjoy the benefits of, this extensive breach, the extensive reach and in terms of commercial ties, right? The question mark is the European growth, in 2026. Are we actually going to see the surge we are expecting, based on German fiscal, what is going to happen there? That's a big question mark. Sentiment is still high, expectations are still high, but we are not necessarily, as it stands now, we are not necessarily that bang that we were expecting to have in Europe as yet, especially when it comes to Germany.
Yeah, as you have underlined, Europe remains Turkey's largest trading partner. So I was just going to ask, how would you assess Europe's overall performance this year? Do you think they fell behind when you compare with US and China? And also, I wonder your outlook for the euro-dollar parity toward year end and into 2026.
We believe that, euro-dollar has seen a lot of the euro FX upside already, right? The question mark is, even though we maintain a very positive view in terms of German fiscal in the medium term, going into the core of 2026 and 2027, we believe that this moment is still a difficult moment. The interesting thing, right, is that we, same time last year, we were talking about China industrial policy, selling manufacturing, selling equipment, selling vehicles into Europe, and dampening European growth, right? I mean, dampening the growth that we could have out of European net exports. Let's be honest here, that continues to happen, right? That continues to happen. So without the fiscal variable, is going to be very difficult, especially when it comes to Germany. It's going to be very difficult to see a more decisive surge in European growth. Other parts of Europe are doing fine. France continues to struggle with political aspects. I think that will probably continue to be a dragging. So yes, I mean, in the short term, we do believe that euro-dollar seems to be a little bit capped around the 116, 117 levels. I find difficult to believe that we are going to reach some of the targets established by many FX strategists out there a few months ago. But with potential a little bit more headway going into 2026. The question mark is what we are going to see out of European growth in the short and medium term. And that's and especially when it comes to sentiment out of Germany.
Mm-hmm. As we come towards the end, looking ahead to 2026, what is the single biggest risk do you think the markets are underpricing right now?
I think it's U.S. growth. As I mentioned before, I mean, it wouldn't, and it's something that we've been talking to our clients, we've been almost like a broken record, right? saying that this economy is starting to, is going back into easing mode, right? Irrespective of the short-term timing, but the US is going back into easing mode, but from a very loose financial conditions position. And we are seeing the effect in equities, right? We're seeing the pop that we had in equities, over the past months. I mean, and it's broad, not only tech, it's broad, cyclicals, all the parts of all the sectors of the US equities markets are benefiting from that. So the question mark is, will the Fed be still easing by Q2 next year? I think that's one important question mark, and how the dollar will be responding if, the data pipeline out of US government shutdown, of course, if the data pipeline increases the intensity and becomes even more possible. And I think that this is the absolute key risk for EM and international risk in general next year, because if the broad dollar changes direction, it's going to be a totally different equation for international risk, including emerging markets.
Luis Costa, thanks for joining our program.